In today's trading video, I'm going to showcase possibly the best trading indicator currently available for scalping crypto, forex, stocks, and commodities. This indicator, combined with the strategy I'll teach you in this video, can double your trading account in a very short amount of time. And as with all my videos, I'll be backtesting it 100 times in Trader's Edge to bring you the true numbers behind it. Now, without further delay, let's jump straight into the video. So, as I mentioned at the start, this video is focused on one primary indicator. It's called the Coral Trend Indicator, and it's a close relative to the Parabolic SAR indicator in relation to how it functions and displays its information. Now, to teach you the strategy, I'm going to be using TradingView.com. I recommend you do the same if you want to follow along. Okay, so we're here on a TradingView chart. Now, heading up to the top chart selection tab, I'm going to be teaching you guys the strategy on the Forex pair USD Euro. I just randomly chose this one because, as I mentioned, this strategy will work on pretty much all Forex, stocks, crypto, and commodity charts. Now, once you've selected your chart, change the time frame to 5 minutes. It will work on other time frames, but this is by far the best time frame in terms of accuracy and the amount of trade entries you can get. Okay, now let's add our indicator to the chart. So heading up to the indicators tab and search for Coral Trend Indicator. Make sure you select the option that's publisher is Lazy Bear. If you've added it correctly, your chart will look something like this. Now that we have our indicator in place, I'll explain the strategy I have paired up with this indicator. So to understand the strategy, first you need to know the basics of how the indicator works. The indicator itself is quite complex, but the signals it gives are actually very straightforward. Essentially, it uses these red and green dots to display the current market trend. As you can probably guess, red dots are an indicator of a bearish trend, whilst greens indicate a bullish one. So now that you know what our indicator is doing, let's go over the entry rules for this strategy. Firstly, to enter a long trade, we need to see a set of red dots turn into green. Now, I know that's quite vague, but here is what I mean. We see about 10 to 20 red dots in a row issued by the Coral Trend Indicator. Then we see the 2 green dots. Once this transition into a bullish trend shows up, we can take this as a signal to go long. Now, our second entry rule is for the second bullish green dot to also have a green candlestick. If both these conditions are met, we can place a buy order on the close of our trigger candlestick with a stop loss set at the recent swing low. Then we can place our take profit target at 1.5 times the risk. And just like that, the price action hit our take profit, so this trade was indeed successful. Okay, here's an example of a long entry that is almost perfect but isn't quite right. We see the Coral Trend Indicator issue 2 new green dots after a long set of red dots. This is good and indicates a change in the market trend direction. However, our second entry rule has not been met. The second bullish green dot has a bar that closed as a red color. This means we won't be entering this trade. Now here is one last example of a long trade. We see the Coral Trend Indicator switch to issuing bullish dots and both our candlesticks are green. With both conditions met, we can go ahead and enter a long trade. Alright guys, that's long entries covered. Now let's move on to short entries. So for short entries, the rules are quite similar. First, we need our Coral Trend Indicator to switch from issuing bullish dots to issuing red bearish dots. After this, we need both candlesticks above our 2 bearish dots to be red. If both these conditions are met, we can place a buy order at the close of our trigger candlestick, and the stop loss will be set at the recent swing low with the take profit at 1.5 times the risk. And just like that, the price action hit our take profit, so this trade was successful. And just quickly, here's an example of a short trade that you should not take. We see the Coral Trend Indicator issued a new red dot after a row of green dots, but it only issued one, then issued another green one. This means the market trend is too uncertain for the indicator to determine, and also means we won't be entering this trade. Now here's one final example of a short entry you can take. We see the Coral Trend Indicator issue 2 new red dots after a streak of green ones, and both our bars are red. This is a good signal to sell short. Alright, so that is all the rules covered. Hopefully you understood them, and if you don't, feel free to play back the video. But without further ado, I'm going to jump into the backtester and bring you guys the results. Alright, I've just finished up and the results are on your screen now. We got a win rate of 55%. Now this is obviously quite low in comparison to my other strategies, but this is because of how simple the strategy is. The goal of the strategy was not to find really profitable and accurate trades once every 2 months. What the strategy is doing is maximizing entry opportunities while still operating in a net positive. Combining the 55% win rate with our 1.5 risk reward, we got a profit of 37.5%. This means with our $1,000 starting balance, we grew our account by $375. Now, you're probably wondering just how long it took me to get these trades. For this strategy, I used 4 different Forex pairs, all on 5-minute timeframes, and found these trades across 4 days. Obviously, this is an incredibly high entry stat, as this means there is on average 8.3 entries per chart per day. And this doesn't include the time I was not trading, so in reality it will be higher, but no one sits and trades for 24 hours a day, so 8.3 is the most accurate number. Looking at our stats further, we had a profit factor of 1.83 and we had 4 consecutive wins against 3 consecutive losses. We also had a max drawdown of 2.86, which is not bad at all. Now you need to remember that all backtest results will be different. The results depend on your initial account size, how much you're putting into each trade, what exchange you're using and their respective fees, what time of the day, week and even year you're trading on, and so much more. But even with all these factors considered, I still really like this strategy, as it's one I can count on to bring strong, consistent gains time after time. Of course, if you want to try this strategy yourself, I always recommend using a demo account with paper money to practice and master any strategy before you use it in live market conditions. So with the backtesting wrapped up, this video is done. So what did you guys think about the results? Is it good enough to trade with, or would you rather less trade entries and far more time but have larger profit margins? Let me know in the comments and I'll see you in the next video.